Welcome back, guys, to the channel. This is Mr. E Forex, and today I have a very interesting video that most of you have been asking me to make, and that is the proper strategies or the proper way to trade boom and crashes, which are found on Deriv broker. If you do not have an account for this broker, you can find the description down below for creation. So, boom and crashes are what they are rather. Uh, at the time being, there are three types. There is C5, there is the 500, the 300s, and the 1000. And each of these pairs, they have a crash and a boom, right? So basically, what a crash does is it makes a series of ticks that are bullish, and then as you can see over here, Crash 500 index, our two time frame, on average, one drop occurs in the price series every 500 ticks. So if this was Crash 300, then on average, one drop occurs in the price series every 300 ticks. That goes the same way as for the Crash 1000 index, right? So basically, what we have on the Crash 500 is it will make a series of bullish candles that that are going up, right? And then it at an average of 500 ticks, it will potentially make a big crash or a small crash depending on how the market is moving at that time, right? So as you can see, let us just go on some lower time frames, right? So we have the M20 right here. Let me just clear some of this stuff away. Okay, now we have a clean, nice chart right here. So as you can see, right, from here to all the way to here, the market has been making some very nice candles, while having some crashes here and here and there. So basically, how boom and crash works, from what I've studied and analyzed, they mostly respect key levels of support and resistance, right? So let me just pop up a quick analysis that I did on C5 that played out nicely. As you can see, right, it's right over here. So this is an analysis that I did on Crash 500, and this is the hour to time frame, right? So as you can see, I marked up some key levels over here that I was potentially seeing how price will react once it hits those key levels, right? So what we have here, we had our with our first key level here that I was expecting. If the market hits, then it will go up, right? So as you can clearly see on the chart, right, that this price over here, like this key level, it was not respected. As you can see that when price actually came to this, it actually made, okay, let me just zoom in a bit. As you can see, when price entered this level right here, it was rejected, but not to the extent that we want. So this key level was not respected to an extent that we had a buy signal, right? So if the market made a wick right here and we had a bullish candle following right over here, then we could have gotten our signal for a buy entry, but the market didn't do as such. So we looked for another key point of interest, and we potentially had this one, right? So basically, how I'm analyzing this market is mostly what you do for most markets, but it is most effective in booms and crashes because they respect these key levels of supply and demand and key levels of support and resistance, right? So, so from here, what we potentially were looking for was for price to come into this area, and we would see how price would react from this, right? So mind you, this is the 2 hour time frame, right? And we had to do some waiting for this to happen. As you know, forex trading is a game of patience. You have to look first before you leap, right? So as the market played out, right, we 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 then came. Okay, let me just zoom out here. Okay, so when price reached this level, right, we had something like this later on. As you can see, when price entered our zone, our key point of interest right here, we had this long bearish candle, and then we had some nice green candle ones over here, right? Some bullish ones, right? So if you have read the candlestick trading Bible, we have some we have some nice candlestick patterns over there, where we have these three candles, which we would like to call the three white cross, right? So basically, what price did over here, when it entered this zone, it started to experience some rejection, right? But as you know, you do not just sleep from here. So what we did, we had to wait for the market to potentially exit this zone, and then it came back to retest. It came back to retest the zone to see if it was valid for a buy. And as you can see from the wicks that are actually down below, that um, what we got in here was a signal for a buy. And so we potentially entered this signal, and as you can see, these long bullish candles were more of a confirmation that we were moving in the right direction, right? So that's basically about it, about booms and crashes, right? So the thing that you just have to experience on boom and crash is you have to go on higher time frames and look for areas of interest, right? So what we had here before all of this pegged out, like my main point of interest was here, which was respected. This is an order block that that we made, or that we made covering all the weeks, right? As you can see, this is the H4 time frame. It is less noise than the H2 which we were looking at. So as you can see, price respected this key point than the first one. As you can see, if we are in the H4 time frame, the OB that we had made above is actually not showing, because if I wanted to make another OB right here, we would have a hard time looking for we would have a hard time looking for one, right? So basically, we're just going to stick with this one, as you can see. So just to trade boom and crashes, what you need to master is you need to master support and resistance, right? You have to look for key points where price was reaching and then getting rejected. Like so, like right here, we can make a nice trend line which was being respected. As you can see, every time when price reached this level, it was giving us some bullish movement, as you can see. So we can potentially profit from all this movement, like we have. Let me just mark up the areas, like we have here, then here. So how support and resistance actually works: when we have price being rejected at two levels like this one, we potentially expect that the third point will be rejected as well. Like how we draw support and resistance, we join up two levels, right? Then we extend those levels, and all the way up to whatever point that we want to reach, right? So every time that price gets to that level, we get this rejection, like as you can see here. So we had this. Then when we had like, okay, let me just highlight this. Like when we had price being rejected here, then here, right? We could potentially then draw this trend line all the way to here, right? And then we'd expect something similar to happen over here when price reaches the trend line that we had drawn. And as you can see from how the market played out, that is what actually happened. We had price moving up the moment that it touched the third touch right over here. So basically, that is the whole idea of boom and crash, is just master support and resistance. And the other thing is easy peasy, and then just practice proper good risk management, and you are good to go. Don't forget to like, guys, subscribe, and if there is any more note that you want me that you want to share with me, just leave them in the comment description. And any suggestions to make my videos better, or if I'm lacking some information or adding some irrelevant information, you can just leave them in the comments below. Any feedback is greatly appreciated. So that is all for this video, guys. See you on another episode. Peace out.